Hey traders, what's going on? Jamie Saettele here. It is December 14th, 2017. A little out of it, a little sick here from my kids. But let's get started. Some chop out there in the dollar. I wanted to start out with just the opening comments, so to speak, from Sunday's swing update, because it's still really kind of how I feel, I guess, about the various, currencies, majors at least. So looking for DXY to roll over, so that would be more euro, of course, right? So looking for euro to turn up. But again, the problem with euro here is this out of this world crazy speculative long position with COT. Okay, so that, it's going to be tough for euro to rally if, and you're seeing it right now, right? You're seeing it today. It's going to be tough for euro to rally as long as that position is in place. So we'll look at the COT numbers here in a little bit. Just so you get a sense of what I'm talking about. It doesn't mean the euro has to necessarily like crash and burn, right? But it does mean that it might need to go kind of sideways, maybe sideways to lower, for a little bit longer, at least to clear that out, right? I do think the trend in the dollar is lower, right? But euro just might not be there yet. We'll take a look at the short-term levels, and again, show you that COT stuff. But that's something important we don't want to forget. Okay, cable, right? There's the long-term chart that I updated over the weekend. We'll look at that. Look at some short-term levels. We had a good short entry early in the week, but it came back, and now, we're back to 34.25 here. So cable's kind of been back and forth all over the place. And we'll take a look at short-term stuff there, see if we can find anything, reasonable to trade either side, despite the fact that I think that there is the potential for a much larger decline. Dollar yen, thinking it's topping or has topped, right? After yesterday's decline, the Nikkei is pretty clean in the way that it's rolled over, right? So we'll look at that. I still think that you could get maybe a pop up into the 13.10 area with dollar yen. With dollar yen, if you did, it would be an opportunity. Of course, we have the euro yen, right, and pound yen as possible shorts as well. Okay, and then Aussie and Kiwi, looking for that turn higher early this week, and that has happened. Kiwi's come back, just triggered us long, so we'll take a look at that. Mark says your charts are not coming up. Yeah, I'm not showing charts right now. I'm just showing, this is the opening thoughts from Sunday. Just want to kind of go over, because it hasn't really changed, right? So we'll look at the charts here in a second. And finally, dollar CAD, still think we could get a final push up into 29.67 or so before all is said and done there. All right, so now we'll go to the charts. Okay, DXY. So the analog we've been following, a little bit of a dislocation here over the last week, but the big thing to remember is really this kind of 12, 21 or so. It's in a week, actually, so next Thursday would be 12/21. So, we could be sideways till then. If we're sideways until then, and then we start to roll over, then this really starts to take shape, literally, and we start to get, maybe, more confidence back in this analog, and the fact that the dollar would be headed lower through probably most of January. Okay, so this is still a thing. This is still something to pay attention to and remember. As it pertains to, so we're still following this, right? Which on the weekly, it's always cleaner, right? Because you have to get less specific, I guess. But oh, here it is, the weekly chart. Yeah, so this is still the model, and yeah, you know, still there. But the U.S. dollar, the FXCM index, is actually one that I'm following for levels at this point, right? So you can see that you've got the parallel. You know, first of all, we've actually, so this is a shift fork, okay, and it did hold, and we got the sharp drop yesterday. Obviously, it's going to be sharper than that of DXY because this is going to include Aussie, and Aussie's been the big performer here this week. But yeah, look for resistance on this DXY bounce, right? Back towards 11,990 or so, maybe a couple ticks lower, maybe a spike through it, I don't know. What I'm saying is that it's a big median line. We've seen good action on it for months now, right? So, you know, this may very well be your first wave lower, and then, you know, easing our way back into resistance in a small second wave before we can get the bigger drop, right? So just be aware of that level. You know, I've kind of got this up on one screen all day. Just I kind of want to know that it's there, or you know where where US dollar is, and if we're hitting up into what I think is going to be really precise, you know, resistance in order to, you know, put on a good position across the board for the dollar. So, except maybe pound, of course. All right, so let's go to euro and the individuals. Okay, so here's the daily. At least, so the median line has kind of kept us from, you know, I guess chasing, if you will. Got it, you know, good spike higher this morning after ECB, after Draghi started speaking, right into a high, and really we've come right back to support. So, you know, this was the 1770 level. I guess you could, I think the week open, where's the week open? It's 1660, where are we at here? Oh, I don't have it on here. I should probably change that. Week open is 1762, okay? Probably retrace 61.8 now, actually. Yeah, exactly, actually, 61.8. So literally right now, if euro is a bull, kind of got to see it hold here, right? And, you know, it's a chop fest right now, folks. I mean, general idea of, you know, it's kind of hanging on a ledge. General idea of long, I think, is correct ultimately, but the timing of it, of course, a little tricky at this point. You know, consider that this is a week with FOMC and ECB, and we are at this point 10 pips higher on the week in euro, right? So this is still the structure to look at, okay? You don't want to be selling into resistance, of course. So that's what happened here this morning. If or buying into resistance, if people were buying into there, they were getting smoked. And we are now at support, so it'd be okay to look on the long side, in my opinion. Let's look at the short-term chart, though, and see if we've got anything interesting. All right. So the one, there's always going to, no, nothing's ever perfect. The one problem, I guess I would say that I have, the drop here into a low is in 3 waves. That does raise the, you know, that does raise the potential, right, or the risk that you have an A, B, C wave flat from here, right? So, you know, we're not predicting the future here. I'm just saying that is a tendency that can warn of a 5-wave rally like this. actually being a flat, okay, and completing a correction from here. All right. So with that said, rather than just buying into a level, right? There's different times, you know, if we didn't have if we had a 5-wave drop into a low here, I'd say, hell yeah, let's just go long now, right? Because I'd have more confidence in the long side at that point, because I'd have more confidence that a low was actually in place right here. At this point, I don't have that degree of confidence, right? Because of the 3-wave drop here. So I hope you probably get what I'm saying, right? That's just something in Elliott that I do adhere to or pay attention to, is that when you do get a 3-wave drop into a low, it's a warning that this might be a flat. Okay, also, let's go 5 minutes. Let's go real short term. Also, we don't have a clean 3 yet, okay? So, you know, we'll see how the rest of the day plays out. I see no hurry to buy into this yet, given everything I've said. But week open 1762, pay attention to that. All right, now the COT I was referencing here, the COT, we are showing I think the commercial short position, right, is the largest since right about here, right? And you did have a pretty good drop before you were able to go higher. So it's just something that, you know, I'm aware of, that it somewhat worries me on the long side for euro at this point. Okay, so just be aware of it. Cable is somewhat similar, and we're going to cable next. So cable is somewhat similar in that 96 percentile on the long position, but that's just because we've been so low for so long, right? We had the record short position back here, so in reality they're not that long. They're just long relative to the last year, right? Because they had they're just actually just crossed into long, so it's really not extreme on an absolute basis. It's extreme on a relative basis. Okay, let's go to that cable chart though. So over the weekend, I was just kind of thinking, I know that's a dangerous thing, but I was thinking about the rally in cable, and I was like, you know what, take another look at it. And sure enough, and by the way, I'm considering this the low, the January low, not the October crash low. You know, closing basis, that's the low. Okay, so that's what I'm looking at as the low, and you know, like for wave count purposes. So how many waves up? 1, 2, 3, 4, 5, 6, 7, and the first 3, right, equal the next 3. So ABC X ABC, it's a perfect measurement at 36.50. Okay, and then you've got the gap, obviously, from Brexit, 36.49, and we turn down from there, and you know, it's an impulsive decline, right? And then we had the rally, which I show on the shorter term charts as a potential flat. So where we got pound, yeah, as a potential flat, right? We were looking at this as an A, B, and then this is 1, 2, 3, 4, 5, C. So to me, there's this combination of long and short-term wave counts that indicates the potential for cable to trade a lot lower while it stays below 35.50. Okay. So with that, it's just something we can't ignore because the potential is so great. Now, near-term price action has not really adhered to that script, I guess, right? thought it might start too early in the week as we started to break down below the 20-day average here. Of course, it came right back. But, you know, I don't have anything really on the short term at this point to suggest, you know, downside is imminent. I mean, the only level to pay attention to really here is 34.78. That is a big high volume level from I think it was from the 4th of December. So I would pay attention to that as we get nearer to that level, and that's about it really. You know, if you start to roll over and there's something there as far as a high volume level, some sort of point of reference, you know, if we break back below the 20-day average, break back below you know, 33.86, which is a well-defined level. It's a square root level. You know, if I start to see something there to take a short, then great, I'll, you know, put it out. But until then, it's just a long-term potential, you know, potential downside, potential fourth wave top with the potential 1, 2, you know, from the September high, and right now that's just all it is. It's just a possibility. Okay. So no entry here at this point just yet. Okay, the Australian dollar. All right, Aussie and Kiwi have been the big performers this week. You know, basically at this point, buy dips, I think, is kind of the way to do it. You've got, you know, we've got positive seasonals actually starting after tomorrow. So you can see that you do tend to go positive for the next couple of weeks and into early in the year, and then there's a little negative part there, and then really you go into one of the most positive parts of the year for the Australian dollar, really through the first you know, most of the first 4 months of the year. So the Aussie could be really setting up excuse me, the Aussie could be really setting up to be, or is set up potentially to be the trade, you know, maybe of early 2018, and it was last year. Remember, we opened the year right here, and then Aussie was like right out of the gate. It was just a, you know, bam, straight up. So we've done a lot of consolidating. We've held a long-term trend line right on 75. The point now, of course, is where's the ideal, I guess, entry point. I'm looking at, you know, we should look at this slope here, okay? Let's see, yeah, we should look at that. It's not all that, you know, well defined in the sense that you don't have, well, I guess you did have some resistance on this, right? And then that was actually FOMC yesterday right here. So you did have a pausing point here on the median line, which I guess does give me reason enough to, you know, maybe give it a shot. If you were to get down into 76.20, okay, that's going to be the level. Not so much because it's this bullish median line, but more so because it was the last touch of resistance on the bearish median line, right? So you want to see former resistance become support in you know, in any manner, right? But it's true with slope, it's true with anything. So if it looks like this little flag here might push higher, but at some point it might not be this week, maybe it's next week. Any sort of pullback into this median line is going to be a really, really big buy, okay? So that's where I am with this. Expect just, you know, me leaving orders at spots to buy Aussie where I think support should be if it's still a big bull, and we'll go from there. Kiwi, kind of a bummer with 2 days ago. Actually had an order to go long at 69.01, and the low was 69, but that was low bid, so the ask, at least on the platform that I'm going on at this point, would have missed it by a pip, because 69.02 or so would have been about the best you could have gotten. So anyway, missed it, sucks, happens, won't be the last time, hasn't been the first time, that's for darn sure. But at this point, what we're looking at here is we are triggered if the immediate trend is higher. Several things. One, we're looking at head and shoulders. As I wrote last night, the, I guess, only problem with this head and shoulders is the fact that it is, it's a little downward sloping. I prefer to see more of a flatter neckline, at least in my experience. Those are the ones that work better. Okay, that's all. But it's still valid. And the target for it is going to be, you're talking probably like, if we actually did a measurement. So it'd be looking at like 71.40. So that's going to be above, it's going to be above this big cluster here, which I do think probably is not going to be the easiest thing to get through. Okay, that you've got former lows here. What's that low? That's 71 or 70.44. Excuse me. But most importantly, you've got the underside of the 2016 trend line, right? And this is log scale, okay? But that was resistance back here, right, on 1024, and it's going to be, it's going to be about about 70.50. So looking for us to go higher right here, right now, but 70.52, and give it a bit of a range, right? You got 70.70, which is the median line, which was resistance back here on 1017. Then of course you get the 200-day average, which I give less weight because I give more weight to the parallels and whatnot. But that this zone expect to be, some resistance. So we'll see how it trades up into it. Might be getting out. I'll let you know, of course. But so far so good on the response here. And everyone knows, you guys all know, most of you probably know what this is. It seems like a random place to be buying, right? But so there's a trick for those of you that don't know, because I know not everyone has been here with SB forever and is used to the tactics, but let's do it. All right, so I'm just going to get rid of everything on the chart. So what you do is you draw a corrective channel, right? And your corrective channel goes like this. So it's just a trend line and then a parallel. Well, if you're in a correction, right, you're going to stop up here and pull back. Eventually you could break out of it. But if you're in an impulse and the trend is actually higher, you're going to break out through it, and your time to enter is actually when you get a pullback to this line, right? It's kind of like a slingshot. We've talked about it a lot over the years, and we've used it a decent amount. It works. You can use it on any time frame, really. So, it worked here, right? It worked on the opposite end here. So, like, this was a same thing, corrective channel, right? Correction, break down, but then you come back and you retest it. Actually worked a couple times, right? Worked once, worked twice. Same exact thing, just on the other side now. So that is a simple setup that I like to use. Okay. Another reason to like Kiwi on the long side here is the the COT here, right? So the speculators are really, really short. My COT data on here does not go back all that far. I guess TradeStation did not start, allowing trading in New Zealand dollars for a while, but you can see that we're back at levels that, where we've seen big lows. That's, pretty much it. I mean, this bottom line is the difference between the commercials and the speculators, right? So we're back at a level where we've taken off from before on the ups, or and made big lows. So I like Kiwi for that reason too. Okay, and you could make an argument that the rally in the New Zealand dollar if we go to a longer term chart here, we could make the argument that you have a 5-wave rally, 1, 2, 3, 4, 5, and then you've got an A, B, C, right? Remember, we were thinking that this rally could be a 4th wave, because you'd be going 1, 2, 3, 4, and then 5, but that may not be necessary, because again, this could be 5 waves up, and this could be your 3. Okay. Yeah. All right. So done with Kiwi. Anyway, like Kiwi, just got triggered long, and pick it from there. Let us go to the dollar-yen exchange rate and look at that in the Nikkei. Dollar-yen. To me, this is still a downtrend based on the trend line from 2015, which is in red, and it's pretty clean. So, if you break above it, it's a big deal, but as it is now, you got the 5-wave move down, and you got 3 waves up, and was thinking that you'd get 1424, for that C wave move, get two equal legs, excuse me, but hasn't happened. And at this point, after yesterday's drop, I'm not sure it's going to happen, right? Probably doesn't. So 1290, 1310, that range. Today's high is just under there. If we go to the short-term chart here, you're still on a level, right? We are actually exactly unchanged on the month right now. Dollar-yen opened the month at 1250. Okay. You can see it right here. All right. That's the open right there, literally right there. Okay, so we are unchanged on the month. I am looking to get on the short side. We're testing a trend line right now, trying to break it. You might have this might be a little 4, little 5. So there's a couple things here. If we're not going to get the opportunity to sell 1310, then if you get a break, you probably get the opportunity to sell back towards the underside of this trend line, which is going to be somewhere probably in the vicinity of, if it happens tonight, it would be, somewhere around 1270. If it happens, say tomorrow or Monday, it might be a little higher. But either way, do expect to attempt or put on a dollar-yen short position relatively soon. And this is one that could be a pretty big opportunity. You could have quite an ugly head and shoulders here, right? It's a shoulder, head, shoulder. But again, you've got the trend line. And let's not forget about the COT with yen. okay? It's one that is really crowded, really crowded. You can see here, they have moderated a little bit, but they were the shortest since, as far as the speculators were the shortest, commercials the longest, since back here in 2014. And, you know, that was a period, wasn't a gangbusters rally in the yen by any means, you know, dollar in decline, but it's pretty good. You know, it lasted for a while, then you went sideways. But the other time that we've been this short, you got to go back further, and you had some bigger rallies. One was a really big low back in 2007. So, you know, the positioning with yen, of course, is still something that we need to be aware of. And if we're breaking down here, we're going to want to get on the short side on an order back on this trend line. All right. The Nikkei obviously is involved here too, and it was one reason why I actually would, you know, I guess kind of believe, so to speak, the drop or the reversal. Rizwan talking about being short euro yen. You know what? I actually wrote down euro yen. We're going to take a look at that in just a second. But you've got a clean 3 waves up, a clean 3 waves down, a clean 5. That's a flat A, B, C, and now we're starting to drop, as you can see, in an impulsive manner in the Nikkei. So this supports the idea that we're lower in dollar yen, right? Lower in Nikkei, and then let's go to gold as well. So here's gold, weekly chart. Looks like it might be actually trying to make some sort of a base on here, right? So the more important level for me is actually this line, which is the log scale trend line from 2011, 2012, which we had seen, you know, as resistance and then support, and then you spike through it this week. Silver is still the much cleaner of the two. Right? Remember the level we were looking at here? Huge level. And you did get a bounce off of it, obviously most of that being during the FOMC yesterday. You could get one more drop, as in, I don't think it'll be major, but you could get an A. This could be, sorry, 1, 2, 3. One more drop to complete 5, just maybe brush out the lows. But remember that silver, gold, copper, all the metals actually starting to get really sold out as per the COT that we're looking at here. Silver especially. You know, I put there's the report. It's free. It's on the website. But silver, they sold out. This is 1 week rate of change and 4 week rate of change. The 1 week rate of change in silver last week was the most ever. Pure panic. The 4 week rate of change hasn't happened except for like 5 times in history. With one of those times actually being right here, right at the low from July, and copper as well. Okay, so maybe time to start looking higher in the metals generally. Seasonals, of course, just beautiful when it comes to the metals. Gold and silver tend to turn up literally at the end of December, right? And they have a very good couple first months of the year historically. So We'll keep that in mind. Okay, let's go to crosses now. We will look at, I want to look at Euro Yen, and Rizwan just asked about Euro Yen anyway, so that works out. This is not Euro Yen, this is Euro Pound. This is Euro Yen. Okay, so Rizwan saying 33.56 entry, good for you. So yeah, you can see that the what we have here, 133.46 is actually the daily reversal level, but really beautiful into this into the slope. So very nice entry. And you're saying, what should your target be? Well, if I were trading Euro Yen right now, my target would be, I would just let it go. You've got 32.10 or so, 32.20 or more like tomorrow, which is the median line of this. Okay, maybe you get a bounce there, but frankly, if we go out further, right, 61.8 decline from 2014, as you know, I'm sure, because we've looked at this for a while. You know, one can envision certainly getting a downside break below this based on, you know, more, I get probably based more on the dollar yen view, but whatever. Euro, again, COT, not so sure what the heck's going on there. So, yeah, excuse me, guys. I'm sorry. I'm obviously kind of sick right now, so I'm sorry if I'm having to pause this to change, blow my nose or something. But you can envision a much bigger drop, okay? You know, what I would do is probably look to take off some at 32.20. You know, maybe wait out the day, though, because if you wait out the day and you end up getting a break below, then you don't have to do that. You can just let it go. So I'm actually interested. We're going to look at the shorter term chart together. All right, so let's look at this. I'm at a 4-hour chart here. Hold on. Gotta wait for this to. Waiting. This is a pain. We'll have to go to it. Oh, it's coming now. Here it goes. Yep. All right, there it goes. Okay, so we've got. Let's look at 120. All right. Yeah, really good. Nice entry, Rizwan. Were you using this chart here? Were you using based on the parallels? Or was it the weekly open at 133.53? Either way, very nice entry. What I would do here, let's see if we have something to work with. Okay, so this could be something to work with. You're just going trend line here, right? So simple stuff here. You got a high, a low, a high. And you are looking for an angle to trade on, right? So remember what we said about the New Zealand dollar, right? And we were showing the examples of the channel and when you break through one side of the channel and which way you go, right? When you come back and retest it. So in this case, what you'd be looking for is if you were to, first of all, this level is pretty well defined at 32.20. Okay, so just a heads up, I think 32.20 be an area where I could see a bounce. All right, that's all. If you break that, your next level is 31.60, but then if we break that, what I'd be looking for is a retest of that to hold, right? Because that would suggest you are in an impulsive downtrend. So my ultimate answer to you, and there is obviously no one perfect answer here, but my ultimate answer to you, Rizwan, is that Euro Yen potential is, and this is the same method we use with Kiwi. Here we are again doing the top side of the broken channel. So we're doing the top side of the broken channel. We're drawing a trend line here and a parallel off of that. The pullback actually found support to the PIP on August 18th. So we're going to target that level, which is going to be down at this point. You're basically looking for a target near a retest of the September low, which is 129.36. Okay, so that area. But yes, this is a great chart. That might be resistance tonight, and I am going to probably include this chart in my update tonight because thank you, Rizwan, for reminding me of you again. Okay, so yeah, there we go. So I'd look for resistance, by the way, probably about 32.70 at this point. Pound yen. Let's go to another yen cross. Again, apologies for my, I know no one wants to hear this, but I can't really help it. All right, pound yen, we'll wait for that to load, but I've got it on the other charts here. Okay. So this is a 4-hour chart, log scale we need, and you can see the beautiful slope action, turning down, blah, 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 blah. If we go to a 60-minute chart, 1, 2, it actually looks kind of like the Nikkei a little bit. We might be done, right? Because this is an A, this counts as an A, B, and then C. So it might be complete. We'll see how the day finishes up here, but yeah, I'm looking at pound yen too, and that might be a short as well. I'm really pretty torn on euro pound, by the way, right? I don't know what the hell's going on there right now. So, all the Brexit stuff, obviously change pretty fluid, so not sure about euro pound at this point. Might be best just to try out shorts with both euro yen and pound yen. We'll look at the entries later, but yeah, for this one though, what you're looking at is median line first, so that would be near 149. Although eventually, I can envision us getting down to 145. I think the 200-day is close to that level, and we have the symmetry thing going on. If you're trading up here, right, you break the median line, the next spot's going to be the next parallel for support down here. So, and of course, right, on the weekly chart, we did have a, didn't we have a J spike on it? I guess you can't see it here. Maybe it's a little different. Hold on. I thought we did. Oh no, we had the daily one on Friday, not a weekly one. So you had a daily one, but you also had divergence, right? You had divergence on weekly divergence, okay? 2 weeks in a row, actually. So, sometimes the divergence is like a hero thing, and it calls the freaking, here's like a low, right? lows, lows, low, calling really good lows. And then sometimes it does this, and it's big failure. But just, something to know. Okay. That's all I've got to go over for me. Is there anything, are there questions on other crosses? We do have some time left. If people want to look at other markets, crosses, indices, doesn't really matter to me. Whatever you want. Oh, we didn't look at dollar CAD yet, did we? So dollar CAD, I still think, again, it's kind of coiled up here. It's in this tight range. You still have 2768, which is a high volume level to look at, as if for potential support, I guess. But I think the opportunity is on the short side after getting failure. If you get failure up here on the 200-day in the January low, 2967. Okay, that's where I would be looking. As far as the indices, right, we've got the Nikkei pretty clean. Let's look at the DAX. Actually, we haven't looked at that yet. Could be complete as a, 3 waves up, 3 waves down, 3 waves up, right? That would be a WXY in Elliott parlance, but just know that it is 3 different waves, and it's, I'll call it ABC. Although the initial drop is not as clean, but this does suggest downside pressure in the DAX, okay? Which I typically would think would be a supportive thing for euro, right? So that's good to know. Okay. Oh, crude oil. I still think that crude oil finds support closer to the 55-day average, or maybe even closer to 54. But as it is right now, you can see we are holding a little support. This is from the January 2016 low. Again, I think I talked about last week, but why I'm drawing from that level is because that's when the low was also in Brent crude, and this was a final hurrah for WTI on the downside. But that slope line, very clean as resistance in July, September, and then support. It's been support now 3 times, right? Right here in September, or sorry, in November, right here in December 7th last week, and now this week, December 14th. So as long as it's holding up there, you could just consolidate before going higher. The reason I think we need to maybe take one more stab on the downside is the COT thing here, right? It's just like it's like euro. It's like, I'm generally bullish crude. I like crude higher. I think the breakout is for real. Vladimir, what's up? DAX and Platinum. Yeah, I'll look at DAX. We just looked at it. I'll look at it again. And we'll look at Aussie Yen. Sure thing, Pooja. All right. But yeah, so here's the problem in PK about gold. Yes, I will certainly take a look at that for you again. We got a little bit of time. So the problem with crude, right, is the record specs, right? The problem here is that it's just crowded. That's all. So, Okay. Let's see. I'm gonna do DAX real quick. We'll look at platinum. I haven't looked at platinum in ages, and then I'll go to Aussie Yen and I'll show the gold chart real quickly. Okay, so the DAX. Here's the DAX, right? The long-term chart. Always good to have a reminder of it, I think. But the fact that you're coming off a big resistance is something that you want to know. We've got the 5 waves down to 4-hour chart, and then you got the sequence since the 11:15 low: 3 waves up, 3 waves down, and 3 waves up. Right. So they would call this, in the textbook, they would say that this is a WXY, because that's what you would label three waves, each consisting of 3 waves. Whatever, just call it ABC. It's not a big deal. And, the Elliott police might come get you, but that's okay. And, yeah, so I'm looking for the DAX to roll over because of that, right? Now, here is I guess you could say, you could get one more push to make this 3 waves up, 3 waves up, and then 1, 2, 3, 4, 5 C. And in that instance, you would trade up to 13,272 before rolling over, okay? And this would end up being a C wave diagonal. And 13,272 is the 618 of this drop. So that's why, one would, look at that price level, right? So at this point, there's not a real satisfactory answer. It's not like the Nikkei where you have a clean 5 down from the recent top from 2 days ago, right? With the DAX, it pushed above its high, right, satisfying the minimum expectations for this flat, process. However, it, is not clear to me whether or not this is the high or whether it gets barely taken out again. All right. That's just unfortunately what it is right now. It's not super clear to me. I think that draw a line in the sand here, right? If you drop under yesterday's low, actually it's today's low, it's from this morning during Europe, then I would say that that's it, and DAX is going lower at that point, okay? So that's DAX. Show the gold real quick for Pete. So here is gold. This is the weekly chart. My confidence in the gold chart finding a low this week is not super high. I think that the better chart is silver, okay? I mean, you do have, if I go to a daily chart here, you do have, this parallel is not the worst thing in the world, okay? If I were to make a clone and draw it off here, it'd be even better. But here, scroll out. Let me get you a scroll out. You can take a screenshot of it. Okay. This is log. It's important to know. But again, the silver chart to me is better. It's just such a clean level here. This is 2 legs down. It's equal 618 from the crash low, channel, daily reversal, this close there. But with silver, I think that it looks like it needs one more drop, right? If this is A, B, 1, 2, 3, 4, okay. Okay, the alternate is that this is a triangle and it's done. Hopefully we'll have clarity over the next couple of days or the next week at minimum, right? Okay, and then we wanted to look at Aussie yen, and then there was also platinum. Let's actually look at platinum, then I'll go to Aussie yen. Okay, platinum. So platinum actually, this was the slope that I had for platinum futures. If platinum could go take out the low from January 2016, at some point in January 2018, you would have a big divergence with the other precious metals, right? Because you wouldn't have silver and gold at those lows, likely, right? Especially gold because it's so much higher above it. But let's see if there's any measurements on this. You've already taken out, of course, these. You know, from a wave count standpoint, 1, 2, 3, 4, 5, 6, 7. It's not all that clear to me, really. You know, from a wave count standpoint, you could argue this is A and this is A, B, C, D, E, and that this is a little C wave drop, but that C wave drop is like really, 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 really small given that this is a year of consolidation. So I am much more likely to give weight to the downside on platinum at this point, which probably, you know, I guess which somewhat complicates the view on gold and silver. You know, platinum has, again, breaking down through a year-long consolidation, not something that I really want to be fading, okay? That's not to say that it can't be an epic fake out, right? And if that happened, then awesome, but at this point, it's tough to fight something like this. So I don't have a super strong view to offer on platinum. I would say that just be aware of the possibility that at some point in January, if platinum does go down and test this low and make a new low, right, then what you're gonna potentially end up with is a divergence where you have the new low in platinum, but you don't have a new low in you know, in gold and silver, and that would be the divergence that typically is seen before you get a bigger reversal. Let's see if we can get a slope here, and then we got to go to Aussie yen, and nothing that clean. All right, so I don't have a great answer for you on platinum at this point. I'm sorry, but it's just the way it is. All right. Aussie yen. This is a log chart. If you go linear, it actually more or less holds. So if you go linear, it holds. That was the yearly opening price right here. You can see that held up pretty well. And I've got resistance right up at 86.85. Yeah, good level. So 86.85 should be resistance at this point. 1, 2, probably a 3, probably a 4, and then you might try to head lower again. This is kind of complicated for me because my views on this is also why I prefer to just trade the dollar crosses so I don't get all mixed up, right? It's like I know I'm bullish Aussie, I know what levels I want to get out, I know I'm bearish dollar yen, I know what levels I want to trade there. You know, one might be a stronger move than the other, but Aussie yen, to me, you can make a bullish argument here because you're still within this channel, right? But I do know that there's going to be resistance up here. It's a very well-defined area up near 86.85, trend line, right? Underside of a parallel, right? Which was support before. probably close, no, maybe not. I was going to say probably close to 2 equal legs, although maybe not. Two equal legs, 86.50. The trend line to me is cleaner for resistance, 86.80. And if you pulled back, I would watch for resistance. If you want to stay bullish on this, you probably need to see, sorry, not resistance, you probably need to see support on the median line, which was resistance right here, right? So if I were looking at this and someone said you have to trade this, I would say, well, I'm looking to short up near this trend line at 86.85. Okay. Broader potential upside certainly there. We've talked about the head and shoulders thing going on here, right? Oh, that's up there too, 86.90. At some point in 2018, I do think Australian dollar specifically is going to be a super performer and might be the trade of the freaking year for all I know. And it might take this higher, but it doesn't mean that the dollar yen has to go a lot higher too, right? Eventually it could. Dollar yen, though, is again the COT issue. We're looking lower in the near term, and maybe for a much bigger decline given the 5-wave drop from the November high. So, you know, I wouldn't stick with anything grand here on Aussie yen. I wouldn't try to buy it and hold it for a year. I would look at 86.85 as being resistance. Okay. And the New Zealand dollar is also, Kiwi yen, excuse me, is one that's interesting. This could sneak a little higher, okay, but you can see the trend line on Kiwi yen. This is probably actually a little cleaner than Aussie yen, right? That's log and that's linear. Either way, the trend line is going to be pretty close. I think log's probably better because it's closer here, and intersection though for the trend line is going to be up near 79.76. So if you get there, just know that the Kiwi yen, yeah, Puja. So looking at a near term, yeah. So I would what I say, the 85 level, right? The trend line, yeah. Okay, so that's what I would be doing. It's cleaner on linear, by the way. Yeah, so look for 86. You know, just look for the trend line, 86.85. You know, lines up with the former lows and all this stuff over here. All right, guys. So I got to run. Thank you for your time as always, and have a great rest of your week. I know there's not a whole lot of it left, but the day and a half or so that is left, have a good one. And we'll be back, of course, with another webinar next week, and be back with the update tonight. All right, take care, guys. Bye.